can't believe the year is already coming to an end. Christmas is now behind us and the new year is right around the corner, which makes this the perfect time to review what has happened in the San Diego housing market in 2024 and for me to give you my predictions and expectations for 2025. We finished off the year with another Federal Reserve rate cut earlier this month, right after a roller coaster of an election season that brought in the exact opposite reaction to what most expected to see in mortgage interest rates. And after another disappointing year with respect to number of homes sold, we finished the year with more inventory than what we had last year and steady enough demand that we still saw a respectable level of home price appreciation. So needless to say, the market has been throwing out a lot of mixed signals. And in this video, we'll get into some of the details of those mixed signals and market stats so that you'll be able to walk away with a solid understanding of what has happened this year and some reasonable expectations for what the market will bring in the new year. I'm J.R. St. Julien with the St. Julien Real Estate Group of eXp Realty, and welcome to my San Diego housing market update for December 2024. Let's get to it. So the Federal Reserve just cut its benchmark rate by another quarter point earlier this month. And guess what? Mortgage interest rates rose in response. That makes 3 consecutive months of mortgage interest rates rising after hitting an annual low at the end of September. And of course, the big question is, why are rates going in the wrong direction? And the simplified version of the answer to that question is that the economy is presenting signs that we are in a higher risk environment for more resilient inflation. And this is happening while we're also showing signs of reduced unemployment concerns, which has the market now expecting a greatly reduced amount of and frequency of Fed rate cuts in 2025. And this economic equation has bond investors driving up bond yields, which mortgage rates closely follow. And therefore, the average 30-year fixed mortgage interest rate has increased from 6% to just over 7% in the past few months. So now, what should we expect next year? I would expect that mortgage rates will remain elevated and the volatility of those rates will continue in a similar fashion of what we saw this year, ping-ponging back and forth between 6 and 7.5%. I think it's unlikely that rates will stabilize below 6% this upcoming year. As the Fed will now move slower with its monetary policy adjustments, and as the new administration comes online, I expect uncertainty to be a continued theme for 2025. So bottom line, with respect to mortgage interest rates, I'm not expecting too much change and we'll likely get more of what we saw in 2024, unfortunately, in 2025. So now let's dig into how all of this has impacted our home inventory levels and buyer demand. Throughout 2024, buyer demand has adequately kept up with the supply of available homes for sale. The best metric to track the supply and demand equation is months of supply of inventory. And as this number increases, supply is beginning to outpace demand. And as this number decreases, demand is beginning to outpace supply. So now as we wrap up the year, we're sitting at 2.2 months of inventory, which is down from the high that we set in September at 2.6 months of inventory. Now throughout 24, our inventory levels did improve slightly as the availability of homes has steadily increased. Each and every month, we saw more listings come to market in that particular month than what we saw in the same month in 2023. Now, despite the increase, we're still sitting approximately 50% below typical pre-COVID home inventory levels. So there's much room for improvement. But the big question is, will there be some sort of catalyst that drives a substantial increase in homes for sale to get us back to pre-COVID levels? And in my opinion, there will not be. And here's why. For the last 5 years, the only factor that has impacted the number of homes for sale has been the interest rate. Inventory dropped drastically in 2019 when interest rates hit 5%, which at the time was an all-time high in over a decade. It was a 1% increase over the prevailing interest rate that we had become accustomed to in the prior year, and a 1.5% to 2% increase over what we had seen on average in the years prior to that. And this rise in interest rates effectively cut our inventory in half. And while we saw low interest rates levels in 2020 and 2021 during COVID, those came with additional pandemic issues, so inventory was not able to build despite the drop in rates. And since we aren't expecting a drastic drop in rates in 2025, I don't expect any drastic changes in supply in 2025. Homeowners with low interest rates are effectively locked in, as they are not inclined to make a move unless they have to. And since most of our inventory comes from people who sell their existing home in order to purchase their next one, we will continue to see a reduced number of home sales due to a lack of inventory that is a direct result of higher interest rates. And unfortunately, 2025 will bring more of the same, with a slight increase in the trickle of new inventory that will come to market, but not enough inventory to create any drastic changes in the marketplace or even get us close to pre-COVID inventory levels. Now, with all of that being said, let's talk about how home prices have been affected, because I know that's what people care about the most. The median sales price is what we use to measure what home prices are doing overall in the country. And the median sales price in San Diego County increased 6% from January through the end of November in 2024. And that was after an 8.2% increase in 2023. And this is all while interest rates bounced between 6 and 8% in 2023 and 6 and 7.5% in 2024. So despite wrapping up the year at the higher end of that interest rate window that we saw in 2024, we are still seeing a higher than average level of appreciation in the San Diego market, making the case that the demand for housing is still strong here despite the affordability headwinds that the highly desirable location of San Diego and the higher interest rates bring. So when you combine all of this info, what does this mean for those looking to purchase or sell a home in 2025? Well, here are my 3 key takeaways and what you should expect in the 2025 San Diego housing market. Number 1, continued home price appreciation. Hopefully it's at a measured level, like in the 4 to 6% range, but regardless, continued home price appreciation is expected. So for all of you that are waiting for something before you pull the trigger and purchase a home, just recognize that waiting equals higher prices, period. Number 2, sustained higher interest rates. Unfortunately, mortgage interest rates will remain higher for longer than what we expect. The Fed is only expected to cut its benchmark rate 2 times in 2025, as both the economy and inflation are being more resilient than expected. And bond investors have spoken, driving the 10-year Treasury bond and mortgage rates along with it. Number 3, low inventory levels to remain the norm. Higher interest rates have had a lock-in effect on existing homeowners, keeping them in their homes for longer and keeping those homes off the market. And since mortgage interest rates are not expected to drastically change, unfortunately, neither are the inventory levels. Okay, so we covered a lot of information and you made it this far, so I appreciate you taking the time to watch. Hopefully you got some good takeaways for what happened in the 2024 housing market and some great insight into what to expect in 2025. So please go ahead and subscribe so that you'll get all of my future market updates as well as other useful videos about the San Diego housing market. And if you have any questions whatsoever about anything I spoke about in this video or really anything San Diego real estate, I would love to connect with you. Feel free to schedule a call with me directly via my calendar link below, or just reach out direct via my phone number. It's posted everywhere. So thank you for checking out my video and thanks for watching. I'm JR St. Julien with the St. Julien Real Estate Group of eXp Realty. Hope you had a wonderful Christmas holiday and hope you have a great 2025. Talk to you soon. Take care.